Okay, people, so no matter your strategy or your level of experience in the industry, I'm pretty sure it might have come to your notice that entry is as important as everything in the industry. Entry is very important when it comes to risk management because this is how if you enter a trade at the right time and the right price, it helps us balance the risk on our accounts, right? And when we talk about profiting, when you look at risk to reward, if you don't enter a trade at a proper price or the right price, and right time, it's going to have a lot of issue, capitalizing on that particular price movement for a long term. So in this video, I'll be teaching us my entry systems. I'll be teaching us how I execute my trade depending on the market conditions. So I'll be showing us practical examples with different market conditions. I trade smart money concept. So this is going to be based on smart money concept entry criteria. So if you're new to the channel, please don't forget to subscribe. If you like the video and it's educative, please don't forget to give us a like and say your comment in the comment section. Let's get started. So people, like I said, I'll be teaching us smart money concept entries, right? And if you trade smart money concept already, or generally, entries are divided into two, no matter the system you trade. There are entries that are taken directly, which is most people call the risk entry, and then the entry that you wait for further confluences, that is referred to as the reduced risk entry or the entry confluence or the confirmation entries. All right. So it is the same for my system as well. We have entries that are direct from the directional bias time frame or direct from your structured time frame, and there are entries that we look or we get to filter out in a lesser time frame to help reduce the risk and give us a better or a higher profit target. Right. So the entries that are taken from the structured time frame are basically the entry that we refer to as a direct entry. So just like this particular entry right here, those of us that understand break of structure already and understand all of these concepts that have been named or listed on there, you can see that this is a direct entry. So this is a structure we have, price broke through the structure, right? And then you can see that we are looking to take our price right from that particular supply level, which is either going to be an order block or it's going to be an order flow. All right. And secondly, we have this confirmation entries. These are the type of entries that we go to a lower time frame to filter, or we go to our confirmation entries time frame to filter. As you can see, the POI there is the higher time frame point of interest, and then you can see that we have to wait for another structure to be broken, and this particular trend have to change to a downtrend before we execute our trade. So let's hop on the chart and let me get to practically illustrate all of this for us to understand.
As you can see on my screen, these are the direct entry types, and like I said, I'm going to be showing us in what different market conditions. All right, so the first illustration here is basically when you have a proper structure movement, right? This first illustration here, for those of us who already understand how to trade the smart money, you can see that here we have price pulling down, price came back down, and based on this, because this is just an illustration, we already want to believe that all of the things are probably met here, and price have mitigated a point of interest, and price broke through the structure to the downside again, right? So you know that when price breaks through a structure, right, the impulse or the phase of the market that breaks through a particular swing that creates a boss, all right, this particular movement to the downside, we want to filter out significant stuff. All right, first of all, we want to pay attention to the liquidity, okay, because breaking through a low doesn't there's nothing concerning liquidity there. So what we want to pay attention to first is the first pullback or the first significant pullback closer to the market. All right, so for our illustration, we have it here, which is what the inducement. This is one concept that is used as smart money trap for those of us that trade smart money concept, because we already know, or from the beginning, we were taught that you have to sell from supply and demand, you have to sell from order flows and order block, right? So price is going to create you one here, which is just like an illusion, and if you try to take price from it, it's going to be what it's going to take you out or practically liquidate you. The only time you can take price from there is when price just sweeps that inducement, and then you can look for confluences to sell. The confluence that you need to use when the inducement is swept, we're going to discuss it as one of the confirmation entries. All right, so we have inducement, price have collected inducement, and above the inducement we can then start filtering what our point of interest is. It's either going to be order flow, it's either going to be order flow or order block. All right, so we have an order for me, right? We have order flow and order block here. There are people who look at FVGs and imbalance in whatever. So we have another flow or other block here, and when price comes to it, we just put our entry directly at the beginning of the flow and then to the highest point of it, or the beginning of the block, the highest point of it, right? The lowest point to the highest point for a sell, right? So, and then our stop loss is going to be at the highest point. Entry is going to be the lowest point. Stop loss is going to be at the highest point. Or for a more secure stop loss, you have to put your stop loss at the highest level of that swing that originated the break of structure. This is how you can quickly just place your orders. Let's say you have a break of structure and then price is just somewhere around this level, and you have identified that this is what a valid order flow or order block. You have identified that this is a valid one, and price is going to likely come and react to it and drop. You just have to set your limit orders and then let price do its thing. So when price gets to this level, it's going to tag you into the trade, and then what's going to be the outcome will be the outcome. But for this one, like I said, it is not confirmed. It is not having any other thing that is backing it up. What you're having is just one reason for entering the trade, which is like price is coming toward a particular supply or demand to buy from. All right, that is the reason why. For me, I don't really trade it this way, especially when I'm providing signal, just like I'm providing signal for our signal sections. All right. So this is how the direct entry works when you have a break of structure, right? So when you have a sweep, which is a different market scenario, because if you trade smart money concept, what we are looking for is either price break a structure or price sweep a structure. So if price sweep a structure or sweeps a structure, how do we enter? This is how we enter. This is how we enter. All right. So price came through this low slightly and then went back into it. I'm going to illustrate also using the chart. Okay. So for this particular one, how you enter the trade is the candle that comes to sweep, right? When that candle closes, because if a candle doesn't close, you don't know what it is, right? So when that candle closes, which is then going to give us the confidence that I came below this low and I refused to close below it, and I came back inside to close above or within it, right? So the moment it closes, your entry trigger is going to be the next candle open. This one you cannot use a limit order because you are working based on candle confirmations. All right. So the moment that candle closes, the sweep candle closes, the next candle that opens, you take your entry immediately as it opens, and then you put your stop loss slightly below the wick of the candle that swept the swing. This is how you go directly when you have a sweep scenario. If you have a break of structure scenario, you do this. If you have a sweep scenario, you do this. And then for your target, it is dependent on you and your risk, your reward appetite. If you want to keep it based on structure, the first target is going to be the midpoint of this whole W formation, and reverse is the case for the M. All right, the M formation, which is like double top, and then your overall target is going to be the initial impulse that originated the first swing. That's how your target is going to be for the sweep. And then for this particular break, your first target is going to be this swing low that originated the pullback. It's going to be the swing. This is the swing that originated the pullback, and we already know as smart money traders that when price breaks through a swing, we look forward more pullbacks and more continuations. So to avoid you crying that your profit is being taken away from you, because market also can just break a structure here, create a little bit of something, and then change the whole structure. Your target is going to be here, all right? Unless maybe you have a different risk to reward plan or trade plan, you can target maybe 1:2. Even if it's not up to it, you just take your profit and leave. All right. So this is how the direct entries are when you have a sweep and when you have a break. Let's look on the chart for practical example. So this is VIX 25, and I think we have all of our examples lined up in this particular index. So like I said, for direct entry for the break of structure is right here. Now you can see that we have price came back, price came down right through like so, and then there was a significant swing point around this level. You can see that price broke through it, so we have a break of structure right here. So since price broke through this particular swing, what we're going to be looking at is the impulse that broke through price, and then we filter out what the significant pullback first, which we're going to call what our inducement level. And after that, we look after the inducement to get what either an order flow or an order block that is valid enough to hold price, so that we can sell directly from it and put our stop loss above the order block and order flow. So if I was trading directly, you can see here's our inducement, because this is a significant pullback, which is our inducement. And then at the extreme here, you can see that we're having an order flow. So we're having an order flow. Order flow is a bullish momentum in a bearish impulse. So we have another flow. I know some people will be like, this is mitigated, but this is not mitigated because you can see that this is just inside candles that are laying on each other. None of this candle is taking the highest level of the other one. If this blue candle would have taken the highest level of this white candle like so, then it is going to be considered a pullback, but this is not a relevant pullback. All right, so this is another flow, and if I was to take a direct entry, I would have put my entry right here on the other flow, and then my stop loss would be at the highest level of the other flow, and my target is going to be where this swing point right here is going to be my target. All right, this is going to be my target if I was to take a direct entry for this particular stuff. Okay, this is how the direct entry works. If I'm to go back into price and a lot of illustration, you are going to see a lot of examples that are, price sold or price is reacting straight from the point of interest. You can also see it right here. For those of us who already know, you can see we have a break, right? Price created inducement, and then if you sell directly from this level here with your stop loss above the order flow, price reacted and came back down. And for those of us that like to filter order block within order flow, you can start this blue candle here is an order block, this one from here to the top. If you extend it, price came there and gave the sniper entry there on top of the order block. There you can put a stop loss right above the order block or right above the order flow for safety. This is how a direct entry works for a scenario of a break of structure. Now let's look at a scenario when you have a sweep of structure, right? When you have a sweep, when price swept a previous low. Now you can see here from this particular drop down, you can see that if you look at this swing and this swing is valid because it took this high, right? This high is higher than this one, making this swing point a valid swing point. And you can see that price swept this one by coming down and closing above it. So this is a sweep. Now our entry criteria for the sweep is by waiting for that candle to confirm that I went below but I didn't close, and the moment the next candle opens, you trigger your entry right there with your stop loss at the base or slightly below the base of this the candle that swept, because price can still hunt. All right, and then use your target. The first target is going to be the midpoint, and then the final target is going to be what? Highest point of the initial leg of the W, because equal lows are always creating W formation, like so, midpoint like so, and then W like that. So this is how you enter directly when you have a sweep of structure. All right, and I think we can look at more examples if we want to find them. We're going to find it. You can see price swept this high, right? And price sweeping that high, the candle. Now this is where a trap comes in. That's why I said you have to let your stop loss have breathing space if you are using the direct entry. So this is the first candle that swept, but also if you look at the momentum of this candle, you're not supposed to execute a trade from there, but let's calculate the second candle as the candle you're going to pay attention to. Okay, because honestly, if I look at the momentum from this candle and the previous one, these are all bullish momentum candles. Unless I have this one, this is indecision candle in the middle, then I would like to execute in the next opening. So after the sweep and then price, we execute price the next candle. Stop loss is going to be right here or slightly above it in case of manipulations like so. It's not even manipulation. In case of price coming to collect people like that, it's not manipulation. Price have to actually take money from people, so it's cool. So in case of stuff like that, you let your stop loss have a breathing space, and then your target is going to be the midpoint, which is here, or that side, which is what the lowest low. So either ways, you just have to prepare your mind to accept the risk. If you accept the risk, then cool. Our next type of entry here is the confirmation entry. Okay, so the confirmation entry is kind of like you getting more confidence and more reasons why price should actually sell, and also it helps to tighten the stops and reduce our risk. All right, it also gives our psychology that confidence that yes, let's get into this trade. Whatever happens is definitely no longer our fault, but market trying to just be market. So just like we have our point of interest from a break, so this is going to be a break of structure scenario. This is going to be a sweep scenario as well. So just like we have our this thing point of interest from either the order flow or the order block. In this scenario, when you look for confirmation entry, even the sweep is a point of interest. So if you have a sweep on the higher time frame, it is a point of interest as well. When you have a sweep on the higher time frame, you're going to be using this entry. So for this one, we have what price mitigating our point of interest on the higher time frame, either the sweep or OB or order flow. So when price mitigate the order flow, you have to go to the lower time frame, which is the 1 minute, right? The momentum at which price came to your point of interest on the 5 minute or your higher time frame, that momentum is going to be bullish if you are looking for sales, just like we're looking for sales in this scenario, right? Now we are going to wait for that particular sell scenario, that particular buy scenario that came into our sell level to change to a sell scenario in the lower time frame. Then we can look to enter the trade. That is how the confirmation works. All right, so for this particular illustration, let's just map out the whole structure properly. So the price is going to be something like so, and then we have that order flow, right? Then we have this inducement, and then we have this. This is how price is basically going to be if we are trying to combine the higher time frame with the lower time frame. Should be something like that, yes. So we're going to have here as a break of structure, right? Price broke through the structure, price mitigated our point of interest. So the whole of this is a higher time frame now, but this particular place is going to be our lower time frame. Okay, so let's have at the back of our mind that this is our lower time frame structure, or our entry time frame structure, this one. So this is how it's going to be on the higher time frame, just an impulse. All right, so on the lower time frame, it's going to be something like this. The impulse on the higher time frame is a trend on the lower time frame. If you don't know, please remember that already. Okay, so we're going to have this like so, and since we have this on the lower time frame coming to our point of interest, when price mitigate our point of interest, try to pay attention to the last swing of that particular trend that came into our point of interest. If price broke through that swing, this last swing here, this last swing that was created before price came to our point of interest, if price broke through that swing significantly, just like this one, and then we see that it's a break of structure, it means that when price come down to change that low into a downtrend, because we're going to have a change of structure here, right? Because here we are having low, higher low, right? We're having a low, higher low, higher low, and then high, higher high, and higher high. So when price fails to create a new higher high and break through our previous higher low, it becomes what? A lower low here. Becomes a lower low. So when price does that particular thing, and here price broke above it too, you have to make sure that you need this inducement to be created. Then you sell after the point of interest that are there after the inducement. So it's kind of like the same stuff you're looking for on the higher time frame that you be looking for on the lower time frame. All right, when inducement, when we have a change of character on the, if our lower time frame structure didn't sweep the last swing, instead broke above it, right, before mitigating our higher time frame structure, when you have the change of structure here confirming that we are now in a downtrend, you have to make sure that there's an IDM or inducement created, and you make sure that you sell above the inducement. Any other point of interest above the inducement is where you want to take your price from. So I believe this might sound a little bit confusing, but when we hop on the chart, we are going to tackle it. So this is basically the chalk entry criteria. All right, when price have a different trend to your point of interest and then changes that trend to the what, to your higher time frame directional bias. All right, so the same scenario here, but in this one, if you pay attention to this, we are having a sweep here. Now when we have a sweep here, the moment that change of character happens from the lower time frame, changing our lower time frame trend to the what, higher time frame trend as well, this scenario you don't need an inducement. The reason why you don't need an inducement is that what we are looking for, why we inducement is basically what, in liquidity, right? So we are looking for liquidity to be collected here because there have been no liquidity collected apart from this one. All right, and this liquidity collected have been used to pay people that are buying it. That is the theory behind it. All right, so this liquidity collected here have been used to pay the people that took the reversal buy, because people were looking to sell from here. That is why they got capitalized, right? They got liquidated, right? Now people that bought it counter trend have been paid with that particular liquidity that have been collected here. Now for those of us who are not looking to sell, they need fresh liquidity to be collected before we can get paid. All right, that is the theory behind it. Okay, so because of that, since we are having a boss here and no liquidity is collected still, liquidity need to be created and collected here, because some people will still come here from this particular supply, their entry, and still put their stop loss right above the supply and then get liquidated before we tag in the trade. All right, this is the theory behind it, but this is how it works. Okay, this is how I've been using it, especially for the whole of this year, man. This year I've been like my most profitable year since I've been trading, and this is the system I adapted. Okay, so the same way we are having was just a structure like here, just like the other one, but in this particular one, price came to our point of interest here on the higher time frame. Point of interest can be a sweep as well. So in this scenario, price came to our higher time frame point of interest, right? The other flow, the other block, or even a swept scenario, price came to our higher time frame point of interest. Now price broke through the low, changing our lower time frame structure that came to our higher time frame point of interest into a downtrend. But in this scenario, the last low before we mitigate our point of interest on the higher time frame was the last high was swept. Sorry, since price swept the last high, we don't need no more liquidity to be created and collected because liquidity have been created from here. The theory is that people are looking to buy from equal highs, sell from equal highs, and they have been liquidated. So it is okay for us to get in the moment price pull back after the chalk. So when price pulls back, the whole of the other flow that went up, it is okay for you to execute from there, sell from there. So the flip for the uptrend, all right, the flip is for the uptrend. This one is we are dealing with downtrend. Okay, so let's hop on the chart and let's show us how this or what all of these things mean. VIX 25. Okay, so we have our higher time frame here. This is our higher time frame point of interest. Right, let me take off all of this. This is the trade we took in our Signal group today. If you want to join the Signal group, please look in the link in the description and WhatsApp me directly. So this look at this level. Let's mark it out so that we don't mistake it. Right there. Okay, right there. Okay, this is our level, right? This is where price came to our point of interest. Let's put out the white one. When price came to our point of interest, right, on the higher time frame. So when price mitigate the higher time frame like that, we go to the 1 minute because we are looking toward get the confirmation entry. So if you look at our Signal group as well, for those of us that are there, I made mention that price is going to come here and we're going to wait for entry confluence before we actually deal with price. So if you want to join this Signal group, it is $10 and we're going to be sharing signals from now to 31st of December. Link is in the description. Please contact me on WhatsApp. We want to look at what the 1 minute for confluence, right? So you can see that price has mitigated our point of interest, right? And if you look at this particular structure, this is our uptrend that came toward our point of interest. Now this is the last high, all right, and from the chalk entry we're supposed to look here for the change of structure before we look for entry, all right? But price is always dynamic and price is always wanting to play with us. So what happened is that price converted this type of entry to the other type by converted this boss entry to the sweep entry by creating a high here. You see a high was created here, right? Price came above and closed below that high, so it changed that whole scenario of we looking for a chalk entry, sorry, a boss entry into a sweep entry. So since price has swept this guy, what we're looking for now is what price to what breaks through this low, right, giving us the change of character because this is still our uptrend creating higher high. So price should what come through that low to create a change of structure for us to know that yeah, it is time for us to start selling. So price did that very well. You can see price came through the low. Right now price have come through the low, and the next thing we have to look for now is for the relevant area to buy price from, or sorry, to sell price from, to execute from. Okay, so price came through that low after sweeping. Price came through the low. We're looking to execute price without even looking at inducement. For those of us who understand smart money entries very well, when candle, either the candle closes above or below for the 1 minute, it is confirmed to be a chalk. All right, take note of that. So we have this like so, and then this very other block candle was our first area to execute price. The next one is this other block candle here, the second area to execute price. So we just executed there. Like I said, my own stop loss, I like to put it at the highest level of that whole impulse so that you'll be safe no matter what price decides to do. All right, and if price invalidates you, then you know that the whole thing is not going to happen. It's not going to actually sell. So we executed our trade, you can see right on this particular one, and then we have our stop loss above right there. So for a scaling purpose, you can see that price also came to respect the extreme order block before finally dropping to take profit, right? So this is the 1 minute entry. right? This is the 1 minute entry, and our target was 1:3. Our target was somewhere 1:3, somewhere there, something like that, because that's over 1:2 already. And then if you want to target for the first target based on this entry criteria, it's supposed to be here, which is the midpoint that went back to your point of interest, right? And then the overall target is supposed to be at this low here. You can see price also came just deep and then went back up. So that is how to execute a trade when you have a sweep scenario for your entry criteria. All right, let's look at for a boss entry criteria now. All right, guys, so this is VIX 100 and this is already at the 1 minute time frame. So this was our higher time frame or the 5 minute order block, right? So you can see, like I said, what we pay attention to is our entry, or how price came to the order block or order flow of the higher time frame. You can see we came in a downtrend, significantly downtrend, right? So the last swing high, the last swings, this are like so, like that. Then instead of price creating this one and keep continue, price didn't continue. What happened is that sorry about my voice, I'm already exhausted. So price didn't continue the downtrend. Price what broke through the last swing lower high, right? It went above it. So we have a change of character here. And if you pay attention to this one, nothing swept the last significant low. So we're not going to be paying attention to the sweep entry criteria here. This one is a significant chalk entry criteria, right? So price swept, and instead of price collecting maybe an inducement to so we can find our entry via the inducement sweep, price keep mitigating each other. You can see all of them are mitigating each other till this one and to that level here. So all of them keep mitigating each other. And when you have this type of scenario, it means inducement keeps shifting and shifting. The last one here is always the inducement, right? So this is the inducement. Inducement is needed here. Why? Because liquidity is not collected from equal low or equal high. Price is not sweep, so inducement needs to be created. So since inducement is created right here, our entry is going to be what? A significant order block or order flow that is unmitigated, that is right after our inducement. All right, that is where we're going to look for our entry. Now if we look at all of these things, for those of us that understand our criteria for order flow or order block, no order flow is relevant because they all kept mitigating each other. You can see this one came to this one, they all mitigated each other, but we have an order block line here, this guy. So this is the order block this is the only valid order block that is on this particular phase, and you can see that price came to our order block, just sniper entry, and then that was it. So if, like I said, you can put a stop loss there if you like, but for me that is too risky because price can decide to also collect that order block, because most people like to do that. And then for me, I like to put my stop at the base and your target. You already understand what I said. All right, people, so let us illustrate when you have a higher time frame sweep and you're looking toward for an entry confirmation on the lower time frame, because all you have illustrated is a higher time frame boss, right? So when you have a higher time frame sweep, how do you filter your entry from the lower time frame? So clearly today VIX 75 index did this. Like I said, if you like, you can enter the trade directly from the sweep on the higher time frame. So after the sweep, you can enter there and then you stop your take profit. You know how to put it already. But if you want to use the 1 minute time frame, so we said that one of the reasons why we use inducement when we're looking for the chalk entry is that it's because we need liquidity to be collected, right? If you look at this particular 1 minute, also the 1 minute candle even confirm the sweep, right? Even if the 1 minute candle doesn't confirm the sweep, since your higher time frame candle confirms the sweep from the previous low, right, or the previous high, once you come on the lower time frame, your focal point is just getting your chalk and then looking for your entry point. That is all. So you can see that we have this level, price came back down. This one is very, very tight, so if you are not really experienced, it will be very difficult for you to get the entry. If you look at this high, this candle high, and this one, the candle in front is higher than this, so meaning single candle liquidity was collected, meaning this is a valid swing lower high. It is very tight, but it is a valid swing lower high. This is significant pullback. So because this is a significant pullback, price coming above it means we have gotten a change of character. Since we have gotten a change of character there, price is coming back down. What are we looking at? What we are looking at is what a relevant level here. You can see the white candle, relevant supply level, relevant demand level, which is this white order block candle here. to buy price from. Multipliers came to it, you can see how price fly or price flew. So price bought from what, that particular level there, and that is how it happened. No need for inducement because we are collecting swing low, even if it was collected on the higher time frame.
Alright, people, I hope that was helpful. Please don't forget to practice all of this before you put it to work. Don't forget to practicalize them well, go through them, make sure you understand the concepts, make sure you understand all of what it takes for you to use these entries and when to use them. Alright, practicalize them very well so you don't have yourself to blame. For other concepts that have been mentioned there, because I'm pretty sure this is not a tutorial that I broke down to the basic, I just brought it to people who already understand the system. If you want to properly understand our trading system, please look in the channel. We have a lot of videos that explain each and every concept that have been spoken about today. Thanks for watching and stay highest.